So on the January WPI data, it came in at around 2.3% or thereabouts. Latha joins us to help us out with her analysis. And we have Aditi Nayar as well, who's joining in. Latha.
Well, in a rather bleak market environment, the macros are looking good. The wholesale price index at 2.31 is more benign than the CNBC-TV18 poll, which was 3%. The important part is food prices have fallen and manufacturing prices have increased a bit. Manufacturers don't like too much of fall. I mean, below 2.5% would be deflation for them and they won't like it. So actually, this is a most pleasant set of numbers as far as wholesale price index is concerned. The food basket was running at, between 8 and 13% at the wholesale level. And the number that's come today is 5.88. That is the food inflation. And within that, we still have vegetables running a little high. Year on year, vegetables are still 8.35% inflation. But month on month, they have fallen by 8.24%. So at least we are on the right track. The trouble points are still potato inflation running at 74% year on year, which means, potato, we are still paying double for potatoes. Onions is 28% higher year on year. And, generally vegetables, like I told you, up about 8.3%. But all these items, potatoes down 19% month on month, and onions down 23% month on month. So at least we are on the right track, though we haven't quite reached last year's levels in terms of vegetable prices. On manufacturing, this is about the highest inflation. 2.51 is the manufactured products inflation. And that's, I think, about the highest in quite a few months, which will be a positive. Within manufacturing, base metals and some such important ones have fallen month on month, and we will come to that in just a bit. Fabricated metals is down 0.5%. Semis, mild steel is down 0.7 month on month, 0.17 month on month. Basic metals are down 0.36 month on month. So manufactured month on month fall, but year on year, it's not so bad. Aditi Nayar, Chief Economist at ICRA, joins us. Aditi, this 2.3% inflation for wholesale inflation for the full month of January, does that square with what you expect? And do you see it, rising or falling from here on?
Thanks, Latha. Certainly, this number has come in a lot lower than what we had projected. Our forecast was about 3.1% in line with your poll. And what we noticed is that both the food inflation on the primary side and the core inflation are lower than what we had forecast. Now, on the food side, I think that's unequivocally good news in the sense that it is mirroring what we saw in the CPI inflation as well. And food inflation has been a big issue within our CPI. So when we get benign WPI numbers for food, at least in month-on-month terms, that is good news and it should flow through to the CPI going ahead as well. On the core side, while this month the print is lower than what we expected, I think the uncertainty globally is very high with what is going to happen to relative tariffs between one country versus another and how commodity prices are going to end up settling. There is still some concern that we may see month-on-month increases in the core index going ahead. Now, having said that, we don't think that the WPI is going to rise to unmanageable levels. Our sense is that the average WPI for FY26 will probably end up being somewhere in the range of maybe 2.7 to 3.2, 3.3%, depending on what seems to be, a band around the base case. Of course, if there is a larger hit to tariffs than what we're penciling in right now, the numbers might be a little bit higher. But as of now, the WPI doesn't look like it's going to cause too much of a concern next year.
Okay, just one final question for you. Therefore, are you lowering your CPI numbers? After all, that is what sets policy. Will you be lowering any of your CPI numbers because this WPI is lower than what the market expected?
That WPI's weight within CPI in a sense and the transmission tends to be quite modest and deferred. So as of now, we may not necessarily be shaving off the CPI. CPI is much more influenced by food in any case and also by services, which are relatively unaffected by WPI and by the rupee depreciation trends. We are looking at a 4.2% CPI inflation for FY26. Maybe, we could look at a little bit lower, but I think the uncertainty is still quite high. So 4.2 seems to be okay for now.
All right, we'll leave it at that. Thank you very much, Aditi, for giving us your quick take on the wholesale price index numbers. Lower than expected, so that's a bit of a relief. But is this market going to be happy with anything at all? Actually, the currencies are not a pain point today. Across the board, Asian currencies are not showing weakness. But stock market is falling under the weight of its own expectations.
Well, that's right. Latha, I think just looking at the screen, that some part of this could be margin-led. That is, maybe in fact some of these mid-caps or larger cap names shouldn't be falling so much. But if you have to give a margin, then you'll try to knock off something which is liquid, because in other counters there is no exit actually. So some part of this fall, which could continue for a few trading sessions, this is the feedback that I got, is because it's more trading rather than fundamentals. Select stocks have come down to pretty decent levels, and we know this market was expensive. But I think, that is a factor at play as well, which could be one of the reasons why we're seeing so much of pain, even in relatively larger mid-cap companies. I'll tell you what, we'll slip into a short break. On the other side, we'll have Sudeep Shah, who will be joining in. He'll help us out with how he's reading this particular fall, and if he can comment on the mid-cap carnage as well.